back to Personal Pension Radio. Watch your step. This episode, I want to focus in on those lucky few of us out there who receive or are looking forward to receiving a pension. A pension is usually offered through a government agency or a union or a large old company like Aerospace, Boeing, things like that. There are still millions and millions of Americans that actually have pensions to look forward to, where they have a guaranteed paycheck. Of course, guaranteed by the pension company, but pensions don't miss, and they are a huge benefit if you've got it. If you don't have a pension and you'd really like to know how to build your own pension, that's what I do. I am the income engineer because I have a passion for income design. Now, this is really going to be focused again on folks who have a pension. This came up because I spoke to some folks who actually work for the state of California. The state of California has the number one position in many things. Like, we have the number one taxes, we have the number one crazy government regulations, we have the number one traffic, we have number one, highest gas prices, we're number one. Well, here's the thing. We also have the craziest, best pensions for government employees. The pensions in California are crazy high. It's one of the reasons that the state is so fiscally out of balance, economically upside down. Some would even say, I would say, bankrupt. When you owe so much money in pension benefits, it's bankrupt, basically. But it's the state of California, and these folks that I met, they have pensions to look forward to. So when we went through the conversation about their pension, I said, so tell me about your different benefit options. And they said, well, we can choose this much, right? And this is the higher amount, or we can choose a lower amount. Well, the lower amount is the amount of money that pays out for both of their lives. The higher amount, in her case, was $4,200 per month. $4,200 a month in pension benefit. Awesome. But if she died before her husband in retirement, he doesn't get anything. So they were really leaning in the direction of choosing the lower amount, which is $3,500 a month. So instead of $42,000, they'll choose $3,500 a month, and that benefit will pay out to both of them for as long as they shall live. Sounds good, and it is actually a really good benefit. That's where the pension company and many financial planners stop the conversation. Let's dig into it, because when they shared those numbers with me, I said this. Same thing I've said 100 times to folks in the same situation. I said, that is very expensive life insurance. And he spoke up right away. He said, well, we're not buying life insurance. I'm not buying any life insurance. I said, well, yes, you are. Let me explain. He was still very grumpy, very adamant. Oh, we're not buying any life insurance. None of that crap. Like, whoa, let me explain. So here's what I did. I wrote the numbers on the paper. $4,200. By the way, those of you who are not watching on YouTube, you will miss the visual. I actually created a prop for today's episode. So you'll see it on Facebook, LinkedIn, YouTube, podcast listeners. Imagine the prop. Okay, so here we go. $4,200, I wrote it on the paper, versus $3,500, I wrote it on the paper. That's a difference of, you got it, $700 a month. So here we go. Here's my prop, right? Oh, it's going to be backwards. I'll have to flip the video. All right, $4,200. If they want the money to last for as long as they both shall live, $3,500. That's $700 a month that they give up. They forfeit $700 a month. Who gets to keep the $700 a month? That's right, the pension company, the state of California, keeps the $700 a month. Why do we do this? so the spouse left behind continues to get a paycheck, right? Now, what financial product can you buy that leaves money behind when you die? You got it, life insurance. $4,200 to $3,500, we're taking a $700 per month reduction in income. The state of California keeps that to cover a benefit left behind. You're basically buying life insurance from the pension company. $700 a month is one heck of a premium. That is expensive. Now, is it too expensive? It is a life insurance type benefit. No doubt, that's exactly what it is. They will be basically paying $700 a month to leave money behind for her spouse. That's the way it works. Is it too expensive though? I'll tell you this, it's hard to compete with the state of California or most pensions. But if you have a pension that you're on track to actually retire with a pension, you will have this option in some fashion. Find out how much the life insurance premium is that you'll be giving up to the pension company, and then contact someone like myself. Contact someone that can help you look at your own financial planning. Can you get your own life insurance that will protect your spouse and be less than what you're going to be forced to buy from the pension company? That's it. Think about that. Nobody talks about it at the pension company meetings, that you will pay us essentially $700 a month in life insurance premium. Nobody ever talks about that, right? But if they told you it's going to cost you $700 a month in life insurance premium, do you think you might want to actually check and find out if you could actually put your own life insurance plan in place that costs less so you can keep more money in your pocket for lifestyle in retirement? I hope so. I'm the income engineer. That's what I do. I love this conversation. So send me an email, Craig with a K at craigstrom.com. Craig with a K at craigstrom.com. Remember, like this video, like the podcast, comment on the Facebook post, the LinkedIn post. If you're listening to this on your podcast and you know someone who is a pensioner, they work for aerospace, police, fire, teacher, the city, the county, the state, send them this podcast. They don't know this either. Talk to you soon. Take care.